Welcome back to Mortgage Markets and More. I hope you're having a great week. Today, we're deep diving into how to navigate the low inventory, especially here in New Jersey. So today we're going to talk about the current landscape of the low inventory and what we can do to manage it and be successful. So this one's particularly helpful if you're a real estate agent or if you're a home shopper, whether you're looking to sell and buy a new home or buy your first home, because this inventory situation permeates the whole state. So let's take a look at the current state of affairs here in New Jersey. There's a statewide shortage. New Jersey has 50% fewer active listings versus March of 2019. So that's our snapshot in time. Before the pandemic, we're looking at half of the inventory we normally see. As of January 2025, the listings were around 6,444 new homes, which was up 5.58% year over year and 52.99% from December, but still not enough to satisfy the demand because as time has gone on, demand has continued to increase. The demand hasn't stopped. So there's a backlog of demand. And even though we saw some significant jump December, the seasonality should be considered here. But, that jump from December to March, well, we're going to have to see how these things develop. Regionally, in the Northeast, which is including New Jersey, it remains far tighter than the other rebounding markets throughout the country. We are an outlier. When we start seeing, and you'll hear in the news about how home values are starting to decline in some markets and that there's price reductions happening in some markets. I'm seeing that in Florida. I'm seeing that in South Carolina. Those are a couple states I do a bit more business in, as well as New Jersey. It's happening. So there's some softening happening in those other markets, which we'll get into some of the reason why on that later. But for now, let's just talk about the numbers and the information. If we're looking at sales and inventory, home sales rose 7.6% year over year this January, while the inventory fell 6.2%. It's kind of an interesting counterbalance there, but it just means that maybe there was properties that moved more quickly or properties that were sitting on the market for longer. The price pressures still persist. The state of New Jersey, median sales price up 9.7% year over year. It's according to the New Jersey Realtors. That is really compounded because we did a past episode about how much home values have gone up here in New Jersey. So these home values have been going up for a while now. So you're talking about almost 35% growth if we compare pre-pandemic to current home values. That's a lot. That's a lot of value. Now let's talk about negotiating this market. What can be done? And in order to understand what can be done, we've got to explore, again, what is going on, what's at play. So first and foremost, it's considered a seller's market. And the reason for that is because of the low inventory, simple supply and demand economics. So multiple offer situations are still common. So especially if the home is a turnkey home in beautiful shape, multiple offers are to be expected. In New Jersey, I jokingly say, but I'm serious, you can consider the list price opening bid like on eBay and take it from there. You're going to have to really rely on your real estate professional to provide you valuable insight as to what an appropriate but strong offer would look like on that property. But you can consider list price, for the most part, opening bid. Homes over $700,000, they receive 3 to 5 offers minimum. The really competitive price band in New Jersey is $450,000, $500,000 to $700,000. That's where you can be seeing 15, 25, 30 offers offered on a property that's priced well and is obviously very appealing, turnkey, let's say. Now let's talk about the buyer experience in this market. It's tough. Homes move quick. So on average, I just want to take a sampling of Ocean County for you. Right now, average days on market's 28 days. That's super quick. So that means property is offered and sold. Okay? That is super fast. So as a buyer, one, you're up against the speed of the market when it means you have to jump on the opportunity. Also, Repeated offer failures are very common. So resiliency is an important piece of this. I'm going to highlight a couple towns: Montclair, Morristown, Princeton. Those are extremely competitive, highly attractive markets with low inventory that you can guarantee you're going to be having to really duke it out with the best of the best in those offers in those markets. And that also extends out. I'm calling out, places like Bloomfield, these commuter towns, super attractive, especially for those who may have to commute to the city as returning to the office is becoming more common. Now let's talk about some buyer strategies. Now, it sounded doom and gloom, but I have good news for you. There is a way to manage this successfully, and it's been tried and proven. So first and foremost, get pre-approved, and get pre-approved as early as possible. Getting pre-approved early helps you to understand what your budget is, helps you to understand what you're going to be comfortable offering up to, and it locks you up for your financing so that you know without the shade of a doubt that you've got all of your ducks in a row and you can move forward confidently and quickly as this market really requires. And again, I'm going to say it. You're going to go through the pre-approval process and then be prepared to act quickly. When you see the home, being decisive and knowing, yes, this is the one. I want to give it my all and give it every effort. Then you have to act quickly on making that offer. You will also need to be flexible. Some flexibility is required here, especially because offers are not just about the amount that you're offering. It's also about your terms. The terms of your offer are other things beyond the ones and zeros and the numbers in your contracted offer. It's things like an appraisal waiver. We've explored that in the past. I may revisit that again so we could talk to it specifically here in New Jersey, but an appraisal waiver, having that, limiting your inspection contingencies, putting things down like, we're going to limit our inspection contingencies to things that are structural, mechanical, and health and safety. That means it tells the seller that you're not going to be picking apart little things in the property. You're only going to be focusing on major items that would need to be repaired as negotiating items. Again, I defer to your attorney and your realtor because this is the part of it where on my end, I provide the financing, right? I provide you with the loan. I am managing the risk of the lending. Where you as a home buyer would need to manage the risk is in these things, these contingencies. And the best way that you can manage that risk is to rely on the professionals like me, like your real estate agent, and like your attorney here in New Jersey to properly set offers that are, one, going to be effective, but two, comfortable for you. You will need to look sometimes beyond single-family homes. So opening up your appetite to possible other properties will benefit you because having that could help you to identify the right opportunity that you can be successful offering on. That means condos, townhomes. They come with their own nuances. I'd recommend you check out one of my prior episodes where I talked about on YouTube. You can go onto the Did You Know playlist and look up condo lending. I did a nice deep dive on that. So check that out. And then rate locks matter. When you're shopping for a home, you don't have your interest rate locked. Your interest rate gets locked when you're under contract, when you've identified a property and have an accepted offer. We have a solution for you at Rate. We do what's called a lock and roll or a lock and shop, where we will offer you a rate lock. Typically, it's not as good as current market because we are protecting you as you shop for a home for an extended period of time. So you can do that, or you can structure your pre-approval to absorb what's going to happen possibly in the interest rate market. Be prepared for a higher interest rate, so this way you don't get priced out on the price swings when interest rates move. That's a little fun trick that I use with my families and clients that I serve. So that's an idea. But when you lock in that rate, that matters. And also it depends on the bank that you're working with, how they manage their rate locks. Some banks, you have to lock in your interest rate and then that's your rate. With us, we offer a float down, which will allow you to lock in your rate. And then if the market improves, you can catch a lower rate. You're going to want to ask questions about float downs. And that was something that I mentioned last episode. And then lastly, I am just going to say it again, partner with the professionals, the people who focus their time and energy on exclusively this, because that is what you will benefit from most in the process. So partner with the right pros, and that will be all of your ingredients for success in this market. Now, as a seller, what are your strategies? Let's talk about that. You think you are holding a lot of the cards here, would-be home sellers, but let's talk about some effective strategies for you as well. Number one, having a strategic pricing, relying on your real estate agent to guide you properly as to where to price your home competitively. Secondly, highlight differentiators in your property, upgrades, schools, locations, make your home stand out, not just curb appeal, but by the meat of what it means to live where you've lived. Prep thoroughly. It's very simple. Clean, declutter, stage if necessary. Make the home look good. The better the home looks, the more people can envision themselves living in that home. Go digital. Get involved in digital marketing. Make that part of your conversation with your real estate agent. Find out what their marketing strategies are, because if you're going digital, you're going to get way more eyes on your home. And the more eyes on your home, the more potential offers you'll have. Respond promptly. Getting back quickly will benefit you. So getting back quickly could get that offer to the finish line so you could start the process of selling your home. Then lastly, negotiate those terms. Just as I was mentioning for the buyers, you can negotiate those terms. It's not just in the dollar figure. You're going to want to look at the terms of the offer and negotiate that, particularly when you have an offer you like and you're in attorney review. Work with your attorney to discuss some of the terms that would be beneficial for you there. I'm going to tag this out with a market outlook for you, which is very difficult, but I'm going to do my best for you, okay? So starting off the inventory forecast, Realtor.com, according to them, they're expecting an 11.7% increase in existing home inventory. That's still 20 to 23% below 2019, but that's still showing a trend of improvement as we've been watching when we've been looking at the existing home sales data and taking a look at the inventory numbers. Secondly, home prices. There's a more measured and conservative outlook on home price appreciation for this year. They're expecting, this is according to Realtor.com, around 3 to 4% property appreciation statewide. That, compared with 9+ last year, well, that's because we're hoping to see some more inventory. And with more inventory, that price appreciation will start to come down a little bit because there's going to be more available. Affordability issues are going to persist. That's our outlook here. Because of the volatility in the market, we talk about the interest rates on a weekly basis. We see how they've moved. We had a good run for about 5 to 7 weeks, and then tariff talk took hold. We lost it a little bit, but they're moving back downward again, little by little. And again, I firmly believe it's just stability on interest rates to manage that properly will be helpful. It's not necessary for low interest rates just yet. And we don't want that to happen too quickly because it will shock this system. Construction is also still lagging. So looking to the rest of the year, there's not enough inventory being built. And also New Jersey is a densely populated state with not a lot of opportunity to build. So that is remaining part of this outlook. And then the demand drivers are still going to be there. So the demand is just going to continue to grow. People are still graduating college. They're still graduating upward in their careers and ready to purchase a home. So we're going to see that still fill a backlog of potential buyers. So the inventory will continue to have to grow and pace upward to meet that demand. So that's it for our segment today. I hope you found this helpful and useful. If you have any questions for me or would like me to deep dive on any of these topics, feel free to reach out anytime. Be sure to like, share, and subscribe to the show. I look forward to giving you your Did You Know update later on this week, where we're going to talk about FHA loans. Make it a great day and have a great rest of your week.